Welcome back. I'm Pratap here. Today is 18th November 2024. In this video, I'm going to evaluate different high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, please click on the tab posts. Some of you might be seeing the tab community. Click on the tab. You get access to a post that describes our free training program. And this post is having a YouTube playlist link that will take you to all the training lesson videos. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page to find the first lesson. Here starting from lesson 1.1, all the training lessons are placed in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. Yesterday end of the day report, yesterday means the Thursday last trading session end of the day report, we identified 1, 2, 3, 4, 5, 6 high liquidity zones from daily and 75 minutes time frame. The first one we got the trade is from Dr. Reddy Labs. This is a daily high liquidity demand zone. And our software identified this as a high liquidity zone based on a drop as a leg-in and 1, 2, 3, 4, 5, 6 base candles and a rally candle, drop base rally. So this daily high liquidity zone is fine-tuned with 75 minutes time frame. Look into the 75 minutes chart. Here we have two 75 minute zones are identified. The first one is a drop 4 base candles and a rally candle. And the second one is at the distal line, overlapped at the distal line. See here, this is the failed ERC candle rally. As a dynamic view, it is a rally candle. You have 1, 2, 3, 4 base candles and then a rally and follow through candles. This is the 75 minute zone as an horizon to this entire daily high liquidity zone. This is the way you need to understand. Why we are saying horizon? Because these zones are part of the zone is part of the 75 minute zone is with 75 minute zone. Another part is outside the distal line. That's why they are very critical zones. And those zones will be having the actual institutional order flow at fine-tuned 5 minute zones. Because this is the 75 minute zone. And these 75 minute zones are again fine-tuned with 15 minute zones. And from here, the 15 minute structure in the first one is not really a happy one. The reason is, see the huge risk. The risk is very, very high. You have a leg-in, base, rally, that way you can consider. So not good for trading point of view. But this one is having another 15 minute zone as a rally, 2 base candles and a rally candle, ERC candle, failed ERC candle as a leg-in and follow through candles. Okay. Again let us fine tune with 5 minutes time frame. See the 5 minutes also I didn't draw anymore because 15 minutes is risk is high. 5 minutes if you want to draw, you can draw. You can draw as a rally, base candles, rally, or maybe drop 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 6 candles and a rally. That way also you can draw. But here leg out is there. Entire zone comes under 15 minutes category again. If you fine tune at a 5 minutes time frame, the zone. So when you have such kind of huge big trade because of the leg out candle, you can't plan your trade. This is the area. Planning is very risky. If the zone is violated, huge stop loss. And moreover, risk will be beyond your 5%. Maybe it could be 3% or 4% risk will be there. That's why we didn't plan any trades in this area. And moreover, this area is already tested once. Previously it is tested. Let me show you. See here. This area is already tested. Even it is tested, we didn't plan any trade earlier in this zone because of the risk point of view. But what about here? Here you have again the actual 5 minutes order flow. A rally, 2 base candles and a rally. And this zone is already tested multiple times. Moreover, this 5 minute zone is the actual horizon for this entire 75 minute zone. Tested multiple times. It is tested here. And after that, again, this is the 5 minute zone as an horizon. Today it gave again another test from this zone. So this one is violated. This entire area is violated. So let me remove this because just for our discussion purpose I kept this. This is the actual order flow where you have to plan your trade. This is the 5 minutes area. Prices reached this area. When at 10 o'clock prices reached, you got an entry in this zone. And then prices started moving. What should be your target? Because there is with a pro gap at this blue color line I have drawn. But from here to the blue color line itself, it's almost like achieving nearly 18% ROI, 18 to 19% ROI from here to here. Do prices really reach? That's why you should be very careful. You have to use trailing stop loss concept, especially because the prices carried for a long duration, almost 3 hours, a little over 3 hours time prices were carried. So that's why you have to use a mix, the hybrid trailing stop loss concept I explained in lesson 18 or 19, one of these lessons I explained. And if anybody remember the lesson number, you can put them in the comment section. The example I have explained, I still remember the Reliance example I gave you at the time. Initially we took 75 minutes trailing stop loss. The moment daily zone is created, we shifted from 75 minutes to daily. The same strategy apply. 5 minutes or 1 minute trailing stop loss. Once 5 minute zone is created, shift to 5 minutes. Let me show you the strategy once again for the people, for the revision purpose. See here we got after that rally, base rally, 1 minute zone is created. Why from here we need to start taking? By this time it achieved 1:3 RR. Once 1:3 RR is there, you need to try to protect your profits. A rally, ERC candle, again another ERC, no base candles, but here rally, base, rally, that way you can consider. This is the 1 minute demand zone. It is, see here, prices went, it holded the prices slightly, it looks like pierced. No, it is not pierced. It is exactly the same price. See, what is the low of this candle? 1185. What is the low of this candle? 1185. Just touched the distal line. Even if it is slightly pierced also, you add some entry buffer that will protect you. But anyway, this is a. And after that, a 5 minute zone is created after this. Let me go to the 5 minutes time frame. When the first 5 minute zone is created, here drop, base, rally. This is the, from now onwards, you can start implementing your 5 minute zones. Is there any 5 minute zone violated? When is the next 5 minute zone? Rally, base, rally. Let me draw. It's not violated. Forget about this price action. Before creation of the next 5 minute zone, it is not violated. Again, next 5 minute zone, rally, base, rally. At least consider this is very much better. Rally, base, rally. Even you can. but both are looking like LOTL, this one and this one. But anyway, rally base rally, and this zone is a tested once. Sharply prices moved, a leg-in candle is formed, a failed ERC, then a rally and a base candle, then a rally candle. And this is the first 5-minute zone violated at 13:15 hours, 1 o'clock 15 minutes in the afternoon. Now zone is violated. Almost 3 hours your trade is carried. So this is the place you should exit your trade, because the 5 minutes trend is changed. Now 5 minutes might be having some TCO zone. See here, rally base rally, that way you can consider. This is the supply zone. Okay, why I am saying, we already learned TCO concepts, trends change origin. Those people would have planned a trade here inside this zone. Go to the 1 minute time frame, because 5 minutes is your definitely you will be having a 1 minute zone here. So at this 1 minute zone you can plan your trades. Somewhere here you have a 1 minute zone is available. In this 1 minute zone, if you would have take your entry in this area, see how strongly it is holding the prices, this 1 minute zone. Here you would have got the trade, and see how sharply it moved down. And when you would have got your trade at 13:35 candle, you would have got the trade. 13:35 candle. At 13:35, and then prices were sharply moving up to here, they moved. And here, somewhere here, maybe you have some trailing stop might have been violated. There you might have exited. That way you would have planned your trade. Multiple times it is holding the prices here. And moreover, by the time it is going to be the end of your cash trade, because brokers will be, if you are F&O, if in futures or options, you can hold. But if you took cash trade, somewhere near to 230 or 245, you have to exit your trade. So that's why somewhere you would have exited. This is the whole profit you would have captured. From here to here, somewhere here. Those who are using futures, any trailing stop would have been exited here somewhere. When this zone is violated, you might have exited here. This is the way TCO trades. See, you always get multiple trade opportunities from the concepts you learned, especially the strategies I explained in phase 3. Many of these strategies are very effective, especially TCO strategy is very effective. Of course, there are times they will also fail, but their success rate is good. TCO acting as a high priority. Once it is changed to low priority, that is a different story. See, after reaching here, it gave a very good profit from here to here. Okay, anyway, forget about this TCO, because now we are focusing at HLQ zones. I'm trying to give some revision sometimes to make you remember the concepts which you learned earlier. Lot of money you can earn from the concepts you learned from supply demand zones, but you should be having a proper discipline. Carefully you should think and plan your trades. Anyway, this is the first 5 minute zone is violated here. Going to the 5 minutes time frame. Here you will exit your trade. Whatever the profits you've been capturing from here until here, you would have exited here. This is the first 5 minute zone violated on this day. Otherwise, most of the day market was bullish until 13 hours or 15 hours. How much profit we would have got in Dr. Reddy? Dr. Reddy, you would have got 19,375 rupees profit. which is 14.6% ROI as per one futures cost. What kind of trade it is? It is a fine-tuned 5 minutes demand zone. But how this fine-tuned 5 minutes demand zone is acting? It is acting as an horizon to the entire daily HLQ demand zone. Why we are saying this is a fine-tuned demand zone? Because at the distal line, you have a 75 minute zone confluence, you have again in that 15 minute zone confluence, again in that, again you have 5 minute zone confluence. That 5 minute zone is acting as an horizon for the at the distal line of the daily high liquidity zone. So it's a mix of two concepts. That's why it is even more powerful today, the trade. Such kind of trades we should not miss. Such kind of trades always gives you huge profits. Okay, this is about Dr. Reddy. Next one, Astral. We discussed in our lesson 26. Unfortunately, today we missed the trade. Already it gave one trade. The second trade we are expecting today, but that didn't happen. Maybe the supply is very, very strong. That is what I explained you in lesson 26. There are some times when supply is very, very strong, the zone will be violated. Already this zone is having a very strong institutional order flow. The supply should be even much stronger than that in such kind of scenarios. Here institutions created a 5 minute supply zone, very strong. Of course, this is also a 15 minute supply also here. Drop base drop. That is one of the reasons why it is violated, but it is very unfortunate. But here LTF zone is there. The 15 minutes LTF zone as an horizon to the 75 minute zone is there. That again pushed the prices. Lesson 22, how powerful concept it is. You will understand. But why we didn't take a trade here, I will explain the reason. But before that, let's first discuss about this. Already we got a trade on Thursday, this zone. But Thursday trade is from type 1 proximal. That's why what I did, I went to the 1 minute, I took the type 2 proximal entry. Because the type 1 is already tested, type 2 is still valid. Especially high liquidity zones are zones having high see, earlier we have drawn zone like this. Drop, base, rally. This is wick to wick we have drawn. And now type 2 proximal. This is the 1 minute zone. Drop, base, rally, type 2. Type 2, definitely you can plan a trade. It is a good area. We should not miss such kind of trades. Maybe it is violated today. It may not be the case every time. So definitely we have to plan a trade. It is a very good zone. And this zone is having a special price action in the leg out candle. This is a Friday's trade based on the Thursday's trade based on the type 1 proximal. The last trading session. And today it is violated. Sometime the price stayed in this area. Once it reached slightly, it pushed, but institutions added even more order flow in this area. See the fight in this candle. Finally, with a leg out candle, they completely captured the order flow that is available in this area. Okay, anyway, it is violated. Because it is violated, we got a hit on our stop loss is hit. And how much loss we got? You will get 1,156 rupees loss, which is 1% negative ROI. Exactly 1%. This is about Astra. And the next one is one more stop loss we got hit. That is in HDFC Bank short trade. And that is, before we get into the next, one more point I forgot to tell you. Here we have the lower time frame zone as an horizon to the higher time frame has been executed. See the move, it gave a very good profit from this area to this area. Why we didn't take the trade? What could be the reason? You may ask the question. The reason is, first let me draw the horizon, 15 minute zone. The 15 minutes horizon is there at the distal line. So this is the one. This is the 15-minute zone. This is the 15 minutes demand zone, drop base rally. From this area, once again you see, drop again base candles rally. One more zone is created, LOTL zones. Maybe this is the area we have strong. And from this area it picked up the orders, this entire HLQ zone is created. See, today prices entered into that area, picked up the orders, and then they were started moving up and gave a huge profit. It could have been a very good zone for us. Why we didn't plan our trade? The reason is very simple. We don't have 5 minutes data. Why we don't have? Because the TradingView will provide you only last 1 year data, 5 minutes data. This is 15 minutes zone. Only 1 year data it is available. When this zone is created, actually, this was created on Wednesday, 24th May. This horizon is created. 24th May 2023. This is 2024. If you look into the 5 minutes data, TradingView will be giving you last 1 year data. 1 year or 1 year, 1 month something. So probably till the month September or October you will be having the data. But let me show you the last 1 year data. That too, I took this premium subscription for the higher package only I took. So that's why it is giving. But others you will get 5 minutes data. If you take lower packages, you will get only last 6 months data for 5 minutes. See, when is the first candle for 5 minutes data? This is on 16th October. We are at November 2024. That means last 1 year or maybe 1 year, 1 month data they are giving you. So that's why we couldn't fine tune this zone for the 15 minute zone. Because we couldn't fine tune where exactly we can plan our trade, finding is not easy. Otherwise it could have been a very good trade for you. Let us assume somewhere here you have the trade. Or even if you would have taken a 15 minutes trade also. Why we have to fine tune 5 minutes? To find the order flow. Lesson 20 I explained. If 5 minutes order flow is there, it is a confirmation that there is an institutional order flow. That confirmation will ensure at least that area we get a good institutional zones and we get a higher chances of getting trades, good trades. That's why always we look for 5 minute zones. High liquidity zones anyway you need to take trade in 5 minute zones only because they are the intraday related trades. If it is not intraday, you would have taken your entry at 15 minutes itself. But 5 minute zone, still it should be there. Why? Because it is a confirmation that there is an institutional order flow. Sometimes the 15 minute zone they will touch and they will move. But intraday you cannot take. Even if it touch 15 minutes and if it go up, you will be missing the trade. You can't take because intraday risk management is very, very difficult on the 15 minute zone. But if it is a DIT trade, 15 minutes you can take a type 1 or type 2. So anyway, this is one great opportunity we missed because of data is not available in TradingView. If anybody using other than TradingView, if you are using any other charts, if data is available last one and a half year, 5 minutes data, definitely you would have got a good trade from this zone. So this is about Astral, and the next one, the next one we got a stopped out trade is from HDFC Bank. And unfortunately, HDFC Bank, the 5 minutes zone as an horizon to the 75 minutes high liquidity zone is violated. That way we got the loss. See, the 5 minute zones they work very well, but sometimes they will also fail, right? Today in this zone it is violated. Look into the first 75 minute zone first. Our software identified drop, 2 base candles and drop. Go to the 15 minutes time frame. There is no proper 15 minute structures are available. Here rally drop, no base candles. But here in the 5 minutes time frame, here you have a good structure. ERC candle, base candle, drop, drop. From here it picked up the orders and came, and today it is violated. So because this zone is violated, our stop loss is hit. That is 5 minute zone as an horizontal entire 75 minute supply zone. Rarely it happened, but it happened today. We have to accept the loss. So what is the loss? 1072 rupees, which is 0.6% negative ROA. The 5 minute supply zone as an horizontal to the 75 minutes high liquidity zone. So these are the 3 trades executed today. 1 is successful and 2 are failed. And remaining SBI Life, I think we already discussed or not. This is the 75 minute zone. Drop base drop. This is having a fine tuned 5 minute zone, but it is a tested zone. The 15 minutes time frame, we have a rally base drop, and the 5 minutes time frame, you have rally, 2 base candles and a drop. This is the area. See, prices are sharply coming down. Again, second test sharply came down. Is it a high liquidity? We don't know. It's too early to discuss. So if anybody looking into these sharp reactions, if you want to plan one more trade, you can plan. It is up to your risk. But those who are very strict about tested zones, you can't plan a trade here. But by seeing these sharp rejections, if anybody think there is a strong order flow, if you want to try, if the risk is within our accepted limit, nothing wrong. But those who are very strict about, see, just 2 tests, you can't confirm it is a high liquidity. Maybe next time it will fail, who knows. Moreover, the high liquidity zones we are just predicting, because software way of finding a high liquidity zone is different. Our way of understanding is different. Our way of understanding is based on some assumptions. Maybe if multiple tests are there from this zone several times, how many times I can't confirm that. At least sometimes maybe at least more than 2 times that way, maybe 3 times that way you can assume. So that's why just by seeing the second test we cannot confirm it is a high liquidity zone. But because there are sharp rejections from this zone, that way you can assume it could be area having a strong order flow. If anybody wants to take a risk, you can try. But if it is violated, again you should not feel regret for that. Only experienced people can do that, but those who are recently learned don't do such kind of experiments. Strictly follow. The fine-tuned zone is a tested zone, don't take a trade. Even if you miss the trade, not a problem. But experienced people who can handle the risk, even if it is violated, okay for them, those people they can take, because there are sharp reactions. Maybe we can think there could be strong order flow in this area. Okay, anyway, SBI Life, it did not enter into that area today. Anything we missed? Yeah, one more, Manappuram. Manappuram, some interesting thing is today there is a dividend adjusted. That's why price will be changed. How much dividend they have given? 1 rupee. Because of that, the prices will be changed. The zones you need to update accordingly. What you have drawn on last Thursday may not be same as today. Today, once the market is started, the zones will be changed. Accordingly, we need to update. Moreover, trading view update these changes a little late. Probably, I think after US market, midnight probably they may update. I don't know. But 3 days gap is there. Probably they might have updated in the meanwhile. Friday probably they might have updated. But those who have drawn the zones on Thursday, may not be the same for today. Today before the trading session, you would have updated the zones. How? Like this. Because I have updated the zone. Because I know there is a dividend adjustment on Monday. Because dividend adjustment is on Monday. Monday afternoon, this zone would have been updated in trading view. Monday afternoon. I'm sorry for my mistake. This is not Thursday. This is Monday. Today only dividend adjustment. That's why after the market hours. So this is a 75 minutes. This is a daily zone, not 75. This is a daily demand zone. We have a rally, 1, 2, 3 base candles and a rally. This is how our software identified. And this one updated with 75 minutes time frame. We have a rally, 1, 2, 3, 4 base candles, again rally. And one more drop, 1, 2, 3, 4 base candles and again a rally. You have two zones, fine-tuned 75 minute zones. Again those two zones are fine-tuned with 15 minutes time frame. In 15 minutes time frame, here you have a rally, 1, 2, 3, 4, 5 base candles and a rally. And then again here you have failed ERC candle as a drop, 2 base candles and a rally. These are the 15 minute zones. Again these 15 minute zones are fine tuned with 5 minutes time frame. Here you have a drop, 1, 2, 3, 4 base candles and a rally candle. And this zone is already tested several times. This is the first time, this is the second time, this is the third time, again came up, fourth time, prices went deep inside. Maybe it could be acting as a high liquidity zone because of these multiple tests. If you want, you can take a trade in this area. And this is another fine-tuned zones. You have a drop, 2 base candles and a rally. Again rally, base candle, again rally. That way these two zones, but these two are fresh zones. They are not tested at type 2 level, type 2 proximal level. This is a tested zone. If you consider as a high liquidity, you can plan trade or you can ignore this. It's up to you. And again it is tested. Once again, there is one more test also there here from this area. But have you noticed? Again after testing, this is the horizon 5 minutes. Again drop, 1, 2, 3 base candles, rally is created. One more 5 minute zone is created. Generally it happens from the high liquidity zones. Of course this rally based drop is again tested here. But we focus on the horizon. But anyway, today prices did not enter into this zone. Look into the daily candle. That way we didn't get any trade opportunity. So this is about the high liquidity zone analysis. Hope this information will be useful to you. Let's all meet again tomorrow. VEDL I didn't explain. VEDL we didn't get the trade today into the zone. Let me show you. I forgot. The reason why I didn't explain VEDL is already we discussed on Friday about VEDL. How I fine tuned. The same Friday analysis only you can able to see here. So that's why those who did not attend Friday, if you want to know about VEDL, listen Friday's HLQ analysis video. Friday means last Thursday. Last Thursday is a working day. Friday is a holiday. Okay, let's take a break and let's continue from here in our next video. Thank you.